ready to go now. I pushed record to cloud. So first, any comments or questions on anything that we've done so far?
Not
Yeah.
particularly.
I have one. This is
Okay.
Nick Webster.
Uh-huh.
So I'm coming from the wealth management program, and this is one of two classes I have left. I'll be done first week of March.
Okay.
And I've noticed, as far as course content goes, and even in the syllabus, somewhere at the beginning of it, it says this is a very intense course, I guess, according to course load and whatnot. Anyway, I've made my way through all the lectures thus far in the week, and I'm finding that some of the course material is a little over my head, and since I'm a financial advisor, that's my profession, coming from the wealth management program, it's kind of what I do. I'm finding that this is not, it doesn't pertain to what I do every day. So when it comes to the intensity in the course material, is that just because of the amount that you're assigning, or do you have any suggestions on how I might try to maybe get ahead, or yeah?
Okay. So in terms of the material, it'll be a mixture of the one book that's assigned. Each module has a chapter, and then that supplementing that will be the PowerPoints and the office hours, plus any, there will be some material, the recent developments. Like so far I've just had 2 cases. When we come to anti-money laundering, I will have about a 15-page summary of the new Anti-Money Laundering Act of 2020. So it's those 3 things. It's the text, the PowerPoints, and the office hours. I mean, and basically the PowerPoints is the office hours. I mean, it goes along. So those are basically the materials. And I mean, if you're in wealth planning, a lot of the topics like transnational corruption, money laundering, taxation, export control, that all pertains to wealth planning.
Right. No, yeah, there's no doubt. There's definitely room for, that this class fits in what I do, but I've, it's kind of separate from the finance side of it. So really what I'm saying is I'm just trying to figure out, after watching all the lectures and reading the PowerPoints, I've found that the material is still a little bit over my head. And so I'm trying to figure out what else I could do to get ahead for, next week's assignment.
Okay.
I understand the assignment next week's not really like a discussion, which is what, a lot of classes have kind of incorporated in the program. So,
Right.
like my assignment is going to be reviewed by the professor. And so I just want to make sure I understand the material enough where I could put it on paper. And so with me still being a little bit lost on the material, I don't have the book. I thought that the PowerPoints and the lectures would kind of supplement what we would see in the book. But if you think that we need the book and we need to actually read those chapters ourselves, then that's something I'll look at doing.
Yeah, I would definitely, I mean, some of the discussion assignments, if you don't have the book, I mean, maybe you can do it from the office hours and the PowerPoints and whatever you want to supplement yourself, but I think that would be more difficult.
Yeah. Okay. Well, I'll definitely get the book.
Okay. Any other comments or questions on anything? Okay, as I mentioned in the announcement today, the first assignment is given on, I think it's January, it's either 24th or 25th, and it will be due on the 31st. And there will be four questions to discuss, of which you can select. I think it's I think you select 2 out of the 4. Let me see. I might be wrong. So I'm not positive of that now. But I'll look that up and give you more feedback on that. Okay, so tonight we'll discuss international tax enforcement. And, basically the first part talks about the unique aspects of the US tax system. And then we'll talk about substantive criminal tax laws. And then we will consider evidence gathering in international tax matters, and then the recent changes in exchange of information under tax treaties. And also we'll be talking about the role of international organizations. So in the US system is, very broad. Article 1, Section 8 of the Constitution gives Congress the power to lay and collect taxes. And the important thing is there are 3 categories of US taxpayers, and they all must report their worldwide income on their 1040 or their 1040 NRA, and they all must file all kinds of reporting requirements. So those 3 groups are citizens, US citizens, US permanent residents, and those persons who have they have their physical residence in the US, and it's basically 183 days, but it's based on a 5-year sequence. So sometimes if you were here a lot the year before and not that much the other 3 years, you can still be deemed to have your physical residence in the US. So in my practice, I all the time have, I have 2 clients now. One was born in Maryland, and she's in her early 20s. When she was 1 month old, she left the US, and she lives in a country that has no income tax system. So, but she's recently learned that because she has this US passport, that she should have been filing and paying taxes on her worldwide income. I have another client who's a physician in Brazil. He's in his 60s. He was born in the US. He left at 3 months old. His bank has just told him, hey, we see that you've got in addition to having a Brazilian passport, you have a US passport. So we have to declare you to the US government, to the IRS. So all of a sudden now he's got to come into compliance. So the US is one of the only countries in the world that does this. And, so right away, people say, when they find out what they have to do to come into compliance and how much it's going to cost them, how much it's going to cost them sometimes because they got to file delinquent or amended returns. They've got to pay the taxes and the penalties. Well, and I tell the guy in Brazil, well, the Brazilian tax rate is greater than the US. So you're going to be able to get a tax credit. However, because Brazil and the US don't have an income tax treaty, and because the Brazil income tax system is so different from the US, you're unfortunately not going to get a credit for some of your Brazilian tax that you paid. And I explained that, okay, you might have, that you're going to have to file all these foreign bank account reports, even though your so-called foreign bank accounts are in the same country that you live in. And in addition, you've got this, what's called a Form 8938, the report of specified foreign financial assets. And that's a little bit different than the foreign bank account report. And so when people hear this, guess what they want to do? Anybody want to guess?
They renounce US citizenship.
Yep, exactly. You think that's easy to do?
Probably not, I'm gonna guess.
Yeah, I mean, there's two laws. First, they've got to go through, there's what you have to do in terms of the State Department and the immigration aspects. And it used to be like $100 fee. Now it costs $3,000, I think it's $3,250. And even getting an appointment at the US consulate is not easy. And when you go, they say, you sure you want to do this? There's serious consequences. Before we accept your renunciation document, we want you to go and think about this. So they try to make you come back. And then there's a second group of laws in the Internal Revenue Code. There's a whole group of law on tax expatriation. And essentially, if you meet a certain threshold of either assets or income, then the only way you can expatriate for tax purposes is to first, you have to show that the last 5 years of your returns are in compliance, and you have to file under penalties of perjury, a 8854, which basically says all of your last 5 years returns are in compliance. And what happens if you don't do that? They just keep on taxing you. You're still a US taxpayer. And it also messes up if you try to give gifts or inheritance. That is also going to be impacted. And there is a recent case involving a Russian permanent resident who went and filed his 8854, but then about a year later, he was indicted for filing a false 8854. And he was arrested in London. He was extradited, even though he had some serious medical issues. And he eventually had to plead guilty and pay a lot of money in back taxes or not back taxes. He had to pay penalties for his crime. So a lot of people think the US extraterritorial jurisdiction is very oppressive. And I tend to agree with them, but yet I make my living a lot of times from helping people come into compliance. And so, you know, sometimes people say, this is so ridiculous, I'm going to thumb my nose at it. I say, fine, thumb your nose at it, but you know, you could be prosecuted. And once you're indicted, the US is going to issue a red notice. And even if your country, even if the country that you live in, like Brazil, doesn't extradite its nationals, I tell them that even if you're not extradited, there'll be a red notice out for you. You're not going to be able to travel. So, yeah, so it can be very harsh. So what about, can someone in the US be prosecuted for violating a foreign tax law, foreign revenue law? Anybody know the answer to that? Anybody read the Pascantino case on page 19 of the text? I mean, in that case, two individuals in Maryland and New York were helping run liquor through the Indian tribes into Canada in order to circumvent Canadian excise tax on liquor. They were prosecuted, and it eventually went to the United States Supreme Court because there was a split in the circuits about this question of whether you should be prosecuted for violating a foreign tax law. And, you know, the defendants argued that under common law, one country doesn't enforce another country's revenue rule. It was a very, very close decision. And there was the opinion was written by Justice Thomas, Clarence Thomas. And basically the ruling is that if a US person in the United States does things to violate foreign tax law, that person can be convicted. They can be convicted of wire fraud as long as they do that activity in the US. There is a very strong dissent by Justice Ruth Bader Ginsburg, who, by the way, was married to one of the premier tax attorneys, worked on Wall Street, and then was a professor at Georgetown Law School in tax. She said this is a bad decision because the US and Canada already have a tax treaty. And if Canada wants to prosecute these people, Canada can get all kinds of assistance from the US, including they can be extradited. So, and there's even a collection enforcement agreement or provisions between the US and Canada. So this is a bad decision. But nevertheless, this decision has been followed by subsequent courts. So the important rule is that if in the US you are taking action to willfully violate a foreign tax law, then you can be prosecuted and convicted. So there's also been, in your readings, there is a discussion of the case of the Bank of New York on page 22, where Lucy Edwards and Peter Berlin. Lucy Edwards was a banker at the Bank of New York. Peter Berlin had a lot of good contacts in Russia. he was helping them, he was helping thousands of Russians deposit their money in the US in order to evade Russian exchange control and tax law. They were prosecuted for money laundering and for operating a bank without a license because they were doing so many transactions. So that's another example of if you help someone violate exchange control, which is a type of a tax or a tax reporting requirement, you can be convicted. There's also on page 22 the case of Ben Cooney, who was at one time the head of the bar in Miami. He helped Roy Black. Roy Black is a famous criminal defense lawyer in Miami. He once represented one of the Kennedys when he was charged with raping a woman in Miami. But in this case, Roy Black was going to represent an alleged high-level narcotics dealer. And he wanted to make sure that because of the accusations that this person was a big-time cocaine dealer, that his fees would be okay. It would be okay to receive the fees and he wouldn't be guilty of money laundering. So he hires Ben Cooney to advise him. So Ben Cooney gave him an opinion, and Ben Cooney also got his fee from this defendant. And what happened was Ben Cooney himself was indicted for money laundering, and in the superseding indictment, he was charged with evading Colombian exchange controls. And eventually, Ben Cooney got the case after about a year and a half. He got the case dismissed, but he ended up spending 6 figures on his defense fees, and also it was not real good for his reputation. Yeah, so sometimes also what happens in some of my cases is a person says, well, I no longer have the green card. I didn't renew it and I haven't had it in 10 years. And so I shouldn't still be obligated. But the problem is, unless you officially surrender your green card and can show that you've properly surrendered your green card, you're caught by the US anti-expatriation tax. So then there comes to the issue of, well, what are some of the substantive criminal tax laws? There's tax fraud, there's tax evasion, and a lot of times people are charged with conspiracy to engage in tax fraud, evasion, and the like. And clearly the big case here was UBS in 2009, because what happened was there was a whistleblower, Mr. Birkenfeld, who was representing Mr. Olenkopf in California. And even though Mr. Birkenfeld was prosecuted and convicted and spent a couple of years in jail, he received multi-million-dollar whistleblower reward because he basically told the Department of Justice that, look, this matter of helping US taxpayers evade taxes, it's wholesale going on in UBS and a lot of other Swiss banks. Everybody does it in Switzerland, and they come in secretly. They often say they're just a visitor, and they then, do their business. They pick up new clients or they carry cash, and they do. They have all kinds of tricks. For instance, UBS tells its US taxpayers, well, we'll send you to a law firm, one of many law firms in Switzerland. They will help you to incorporate in Panama or Hong Kong or one of these offshore jurisdictions. And then we'll pretend that the investor in our bank is not a US person, it's just a foreign corporation. And if you want, we will not send your monthly statements to you in the US in case somebody intercepts it. If you want, we'll use also code names, and we'll do all kinds of tricks so that the US government will not learn that you are evading taxes. So that led to the US going after UBS. It took many months, and even the Swiss ambassador met with US Secretary of State Hillary Clinton, and but the US said, we're not backing down. We don't care about your secrecy being a fundamental law in Switzerland. We're going after UBS because for many years, the UBS has been criminally helping thousands of US taxpayers evade taxes, and they ended up entering into a deferred prosecution agreement, which means that UBS has to admit wrongdoing, and they had to pay a $780 million penalty. And then they had to agree to be good and to have a monitor for a couple of years. And then if they did what they were supposed to, the prosecutor then dismisses the case. Increasingly after that case, there were Swiss professionals that were prosecuted. I had a client who was a investment advisor. He had a number of US clients. He asked me what he had to do, and I said, you better get rid of your clients or make sure that all of them have gone into the offshore voluntary disclosure program. If you don't, you're going to be prosecuted. Well, he did it for some, but one of them that he didn't do it for wanted to have a meeting. He sent one of his colleagues, and guess what? The client that he was meeting was wearing a wire because that client had gone into the offshore voluntary disclosure program and had to cooperate. So that meeting was a lure for the professional. So he was indicted, and so was his colleague in Switzerland. Eventually, the US had an offshore disclosure program for all the Swiss banks, and they all had to get a forensic investigator. They had to do a ton of investigation, and they had to confess their sins to the Department of Justice. And depending on the number of US taxpayers and how much money they helped these people evade, they had to pay huge penalties. And the Swiss, the Swiss financial regulators also put out guidance saying in the future, Swiss banks have to make sure that they're in compliance not only with Swiss law, but with the laws of the countries from which their clients come. And that heretofore, Swiss banks should have a global due diligence program. So that was a huge change for Swiss banks and for Swiss cultures. So in the US does not hesitate to go after, well, just to finish up on the Swiss thing, a couple of times I was an expert witness in Swiss courts because as part of the offshore voluntary disclosure for Swiss banks, they also had to tell the Department of Justice which of their officials and which third-party people like outside lawyers, outside asset protection or asset managers had participated in the wrongdoing. So I was an expert witness a couple of times in Swiss courts telling the Swiss court, well, look, if you make these banks do this, I understand it's against fundamental Swiss law. And by the way, some of these people are going to be prosecuted by the Department of Justice because that's why they want the information. They're going to go after these people. And so some Swiss courts issued injunctions enjoining the banks from ratting on their officials. On another occasion, though, I had to testify in person in Swiss labor court because one large Swiss bank that for whom I worked was sued because their official was indicted in the US, and then the official sued them saying, but for your policy, I would not have been indicted. I was only doing this because I worked for you and this was your policy. So there was all kinds of, litigation that arose out of the UBS and the Swiss banking thing. So there's also on page 30 a press release about an indictment of KPMG employees. So in the early 2000 era, the big four accounting firms, in conjunction with US law firms, they were wholesale going after clients who needed a $5 to $10 million deduction. And they had this very complex structure where you bought puts and calls in offshore banks. And at the end of the day, it was designed to give you a $10 million or sometimes $20 million write-off. There really wasn't any basis to really earn money. And so eventually the Department of Justice indicted a number of lawyers and officials from the big four accounting firms and from the big law firms, and basically prosecuted them. And they put pressure on the big four accounting firms not to pay the fees of the people that were indicted, although there's a case discussed on page 33 where a judge held that this was unfair because these cases were so complicated that without having help to pay their fees, the professionals could not possibly get a fair trial because these cases, took a few years and there were thousands and thousands of documents. And but the whole point is that the US will prosecute so-called enablers, whether the enablers are accounting, law firms, banks. They'll prosecute them both in the US and in other countries. They also use what's called a John Doe summons. So that means that they can go into court and they can say, look, court, we see that this bank has offshore offices, offshore branches, and they're issuing credit cards from these offshore banks. We want you to ask this bank to come in and give you the names, to give us the names of all of their US clients for these offshore credit cards, because we can show you that a number of these cards have been used to evade tax. And in almost all the cases, the government wins. So back in 2009, the US, the IRS started an offshore voluntary disclosure program where they said, okay, we know that there are hundreds of thousands of US taxpayers that have been cheating. They haven't been disclosing their offshore accounts. And we give you, we want you to come in and you have to file, the program changed, but because there are 4 different programs from 2009 to 2014, but essentially you had to file either 6 or 8 years of back taxes. You had to pay significant penalties, including a miscellaneous penalty of about 35%. Sometimes it was 25% on the highest amount of your foreign bank accounts. So let's say if during a 6-year period, your highest account was $100 million, you had to pay 35% of that as your miscellaneous penalty, along with all these back taxes and penalties. So and as part of that, you had to tell which bankers put you up to this, which foreign bankers were active in the program. So then that information was shared between the IRS and the Department of Justice, and that's how the Department of Justice started going after some of these foreign enablers. There have been a couple of cases involving intercompany pricing that have gone criminal. A big one was involving Mark Rich, who was a famous securities dealer and trade commodities trader. He was indicted and he decided to move he was already spending time in Switzerland, so he decided to stay in Switzerland. The US tried to get Switzerland to extradite him, and they tried to force Mark Rich to turn over, to answer their subpoena, but Switzerland did not cooperate. This was, back in the like 2001. I was actually a consultant for the Mark Rich team. Eventually, on the very last, so the US never was able to convict Mark Rich, except for some minor things. And on the very last day of his presidency, Bill Clinton pardoned Mark Rich after his former wife made some large donations to the Clinton presidential library. That was not a good day for the Clinton presidency, because it was, there was a lot of adverse publicity about that. So back as a result of the UBS case, Congress in 2010 enacted the HIRE Act, and part of that was the Foreign Account Tax Compliance Act. whereby the US said we want all the foreign banks to search through their bank accounts and to find any US taxpayers and to send us the names and the information about those US taxpayers, because we intend to go after their asses. A number of countries said, no, we can't do that. It's against our constitution. We have, privacy and so on and so forth. So the US found 4 countries that said they would enter into what's called a FATCA, Foreign Account Tax Compliance Act, intergovernmental agreement. And so the US said, okay, we found a way around your constitutional problems. You can just negotiate this treaty. And by the way, if you don't negotiate this treaty, we're going to impose a 30% withholding tax on any dividends, interest, royalties that come from the US and go to your bank or any of the customers of your bank. And so essentially much of the world entered into these agreements. They had to amend their laws, they had to issue regulations, they had to spend all kinds of money to develop software to exchange information with the US. So essentially what happened was, if you have a FATCA intergovernmental agreement, the bank gives the information to the revenue authority, and then the revenue authority exchanges it with the US. So that was the way around. So, and these agreements also said that in the future, the US and the other country were going to work on an international, a global automatic exchange of information. So that came up, and also the FATCA IGA said the US can't fully reciprocate because US law doesn't allow the US to require its banks and financial institutions to give some of the information that the US was demanding from the foreign banks. But the US said it promised to try to change its law. Well, those agreements were 2013 and 14. It's 2022 now. The US still hasn't changed its law. And last week when I moderated a panel with some high-level IRS agents, and I was going to ask that question, the IRS agent said, no, don't ask that question. We can't answer. And the reason they can't answer, of course, is that the US is not even trying to change its law. So meanwhile, in 2014, the international community, the OECD, issued what's called Common Reporting Standard. And most of the world now participates in the Common Reporting Standard, which is another type of FATCA. It's an automatic exchange of information, but it applies according to residency, not citizenship. And here again, the US said, sorry, we're not joining. We think it's a nice idea, but our executive branch doesn't have the authority to enter into the Common Reporting Standard. So again, that was 2014. 8 years later, the US still hasn't joined. And as a result, much of the world is very annoyed that they've done all these things to help the US, and the US hasn't reciprocated. And back in October of last year, when the International Consortium of Investigative Journalists published the Pandora Papers about how how a lot of high-level political officials, including heads of state, were squirreling their assets in foreign jurisdictions in violation of their laws. The Pandora Papers said much of that there were many people who had used traditional offshore jurisdictions like the Bahamas that were increasingly moving it to places like South Dakota and Wyoming, where they have all kinds of trusts, and Wyoming has foundations. There have been efforts by the OECD starting in 1998 to impose pressure on offshore jurisdictions like the traditional, tax havens to exchange information. And if they didn't, they would be put on a blacklist. And then later on, they were told, okay, you've exchanged information, but now you've got to show that each of your laws has economic substance. And as a result, those so-called traditional tax havens have lost a lot of business. Some of them have basically gone out of business. So one issue is evidence gathering. When the US or any tax authority wants to wants to bring a civil enforcement or a criminal enforcement, they have to get evidence. On page 42 and 43, I list all the ways that even without any agreement, the US can compel people to turn over information. They do this partly through subpoenas on the taxpayer, and they do it partly by issuing a subpoena on whoever the custodian of the information is, which is usually a bank or a trust company. And then there are international agreements for evidence gathering, like tax treaties, tax information exchange agreements. And there are also, the OECD has its own multilateral convention on, they call it administrative assistance in tax matters. That's discussed on page 48. So all of these agreements are ways to exchange information, mainly on request when there's a case involved. So in the past, the US used to give incentives. So for instance, in 1986, 1984, when the US enacted the Caribbean Basin Economic Recovery Act, it said those countries that exchange information were going to allow US people that attend conventions there to deduct it from their taxes. Will also, then in 1986, the US said those countries that have exchange of information in the Caribbean will be allowed financing through Puerto Rico. But eventually the US said, we're not going to give. The US canceled those incentives and basically just said, the only thing you get if you don't have exchange of information, we're going to start punishing you. We're going to start putting you on our own blacklists. And so they basically made it difficult for countries to operate tax havens through secrecy. So one issue is if a country like the US goes after someone and they get a big judgment that says, okay, we have a judgment that you owe us $5 million, then they need to collect. And there's a discussion on pages 56 and 57 of what those agreements look like. I mean, the provisions in, for instance, the US Netherlands income tax treaty. But the key thing is the US only has a handful of these treaties. And most of the tax treaties do not have a collection provision. And although the OECD convention that I mentioned has collection provisions, the US has reserved and says, we're not going to be a part of the article on collection. The reason is the US thinks they're going to lose revenue because the US is such a big market for black money that there's going to be more tax authorities asking the US than vice versa. And so therefore, it's not easy for the US to collect a tax judgment. I think that might change in the future. Traditionally, extradition treaties excluded tax crimes, for the same reason that it used to be until 2005 in the Pascantino case, that the US said we don't enforce foreign revenue. But all of the new treaties, all of the modern extradition treaties include tax offenses. So it's now not so easy to avoid extradition for tax crimes. In my announcement, I had as an attachment the case of the grand jury indictment against a Texas attorney in Houston that assisted two individuals to evade allegedly hundreds of millions of dollars by creating trusts in places like Belize and Nevis and multi-tiered corporations. Anybody have any comments on that or any questions, thoughts? Were you aware of that case? Well, one of the interesting things is one of the defendants that was helped, Mr. Smith, Robert Smith, he donated multi-millions of dollars. He went to Morehouse College graduation and he said he would forgive the debt of all the graduates. And he made all kinds of big donations. And the attorney that set up the structure, he made millions of dollars, including he got an annual payment to destroy the records each year of the transactions. And they communicated in code names. For instance, they called the luxury yacht turmoil, and it was very secretive. Eventually, Mr. Smith entered into a cooperation agreement and agreed to pay 139 million in taxes, interest, and penalties in order to cooperate against the person that introduced him to the Houston lawyer, a guy named Brockman, who's a Houston businessman. But the problem is Mr. Brockman now is in his 80s and has got dementia. And so it's the US is probably not going to be able to, even though they've hired an independent physician to examine him, they're probably not going to be able to successfully prosecute Mr. Brockman. I don't think he's going to be able to stand trial, but they're definitely going after the Houston lawyer that set up these structures. So let me stop there. Any comments or questions? I mean, another interesting thing that's happening is increasingly foreign prosecutors are going after foreign enablers. So for instance, Belgium, Germany, Denmark, Belgium, they've all gone after foreign banks, especially Swiss banks, and they've also going after US enablers. And I think the prosecution of US enablers is really going to accelerate because a lot of governments are not very happy that they had to spend all this money to help the US get to catch US taxpayers that were cheating. And they see the US failing to reciprocate. And they also see a lot of their wealth moving from traditional offshore to the US offshore. And they see, US professionals participating in attracting and servicing, the foreign wealth. So I think that will be, something to watch, and also something that if you're involved in wealth management and wealth planning, you have to exercise due diligence. So Amy Cook, my question is, why do other countries continue to help the US prosecute tax enablers without reciprocity being given? Well, it's not that the US never reciprocates. I mean, the US does help when there are requests, although until now, the US has had to say, look, we can't give you the information on who the beneficial owner of XYZ company in Wyoming or Nevada is, because those states don't keep beneficial ownership information. They don't require it, and therefore we have no way to tell you who the owner of XYZ company is. It just says on, the company register, it might be, a nominee, and we just have no way of, finding out that information. So, but otherwise, the US does, for instance, issue John Doe summons for other countries. But yeah, I mean, it is reaching, it is controversial in it's mentioned a lot when the OECD has a meeting on taxation. It's in the hallways, people are like saying, how can we get the US to, truly reciprocate? The US is just using these international organizations like FATF and the OECD, which the US dominates, to impose pressure on the small countries. And as a result, there's a lack of a level playing field. And we're sick and tired of it. We're not going to take it anymore. But, still, because the US is the largest payer of the OECD budget, do you want to bite the hand that feeds you? So, that is a problem. So, any other comments or questions? Okay, so I think that's all for now. And I wish you good rest of the weekend. And see you next week. Cheers.
Thank you.
You're welcome.
Thank you.